So the Bitcoin price is down today again, and the latest year we haven't seen the best time for Bitcoin. We are a bit spoiled. If we look like 5 years back, it's 420% plus. So seeing Bitcoin now at the levels we have at the moment might be a bit disappointing for some of you investors out there. Some people buy parts of Bitcoin, some people all own whole Bitcoins, and obviously we have institutional investors who owns a lot of Bitcoins. So I wanted to talk about today is my thoughts on why I think Bitcoin is trading down for a while, and the short-term and long-term prospects for Bitcoin, and do people need to be worried or not, etc. And obviously what are we looking forward to. And I also want to show you an interview from CNBC today with the institutional strategic head of Coinbase, who are obviously positive in terms of crypto going forward, and his take on the current situation. And obviously through analyzing these type of interviews we can learn something and also stay calm as investors long term. So first, my take on Bitcoin. Obviously, the truth is we have seen a weakening in institutional ETFs flows and demands lately. So it's been some outflows here during November. So that's basically has driven the price down in Bitcoins. Probably we still have loads of long-term holders here, but we know that Bitcoin is a volatile um, um, thing to hold, and it's same with the tech stocks. Some of them has been actually trading down lately. So some call so for example, if we call Bitcoin an asset, obviously most people do at the moment. Gold has performed a lot better than Bitcoin. So sometimes Bitcoin is performing better, but at the moment it seems like people want a more safe alternative. So that is one thing that has pushed Bitcoin down. People feel like when we have this turbulence around with a lot of uncertainty in terms of politics, war, etc., maybe that has affected Bitcoin a bit and putting on some selling pressure. Obviously, with a lot of countries having soaring debt levels, like for example 48 trillion debts for USA, and also other countries has a lot of uh, rising debts to increase their um, public offerings and also to build infrastructure, etc. We have the same situation around in Europe. Obviously, liquidity will be tightening, and we also see, especially in the USA, the inflation not going down to 2%, is still around 3 to 6%. So that means that maybe the Federal Reserve can't decrease the rates more, and that might get the market a bit cooler. Also, we have seen actually some long-term holders selling here. So it can be that we're getting it at the end of the year and some people want to cash out and have that money on hand. And obviously, when we know that Bitcoin is that type of asset that people trade, so when it gets below certain thresholds, like for example 100,000 US dollars, it can put some downward pressure, because this is an asset that people likes to trade, and also institutions like to trade. So through having a lot of velocity, obviously institutions will earn money on Bitcoin trading, etc. So for long-term holders, this is no problem that the Bitcoin is a bit volatile. We have seen historically that it can be 50 to 80% downturns before it goes up again. But the believers in Bitcoin are obviously saying that long term you will always earn money, and that has been true so far. And we know that the thing about Bitcoin that still at this specific moment is, I think the story is still strong. meaning that governments around the world are having problems to actually keep up their promises without printing a lot of money, and also people are still very reliant on banks. So with having Bitcoin, that possibility to just not go through banks, and also having that asset that are sort of safe from inflation, are still very attractive for investors, I think, long term. And the story of Bitcoin has not really changed. I still believe it's a tricky asset. I think it was Warren Buffett who said Bitcoin can go to zero because it's no fundamental value behind it more than the belief. But yeah, so for some investors that believe in fundamentals in companies, it's still hard to comprehend why Bitcoin is where it is. But we have seen that people want that freedom in this society. We know that probably stablecoin and similar digital currencies are gonna be spread around the world for countries. And obviously, when the governments control the digital currencies, they can kind of decide how people should spend it in a way through different taxes and what's legal or not, while Bitcoin still are being used kind of decentralized with more freedom. And I think that the freedom part is still very important to, for example, with a governmental backed digital currency like stablecoin, they might say, oh, you do not have a good credit score, or you are, for example, under investigation for some kind of crime, you won't be able to maybe get your money, your salary to trade. While Bitcoin is decentralized, anyone can have the freedom to buy or sell it. So that's a big difference. So yeah. Anyway, obviously, when it's going down like this, some people actually are losing a lot of money and get stressed. And for some people, the Bitcoin is like a 15, 20, 25 years asset, so they don't really care. But for some people, it's more of a trading, and they just want to have that money in 1 to 3 years. So when they see the asset they trade going down, obviously the psychology of it, the downward pressure, will maybe enable them to sell, and they will get what you call paper hands, and someone will be there and pick up the bitcoins that they are selling. So long term, we can't really be sure what's happening, and whether or not this will continue down more than the 25% here from the top, or if we will have an upturn again. Um, so anyway, so this is a little interview here on CNBC today about the Bitcoin, and let's just see what Coinbase says about the current situation and cryptocurrencies.
Coinbase head of institutional strategy. We've seen this movie before. What was the biggest sell-off we had? We had a move from I think 65 down to 15,000.
So this was a bit earlier today. So Bitcoin, as of today, was heading lower than 95,000 per US dollar. So now it's about under 92,000 US dollars.
We at one point with Bitcoin.
Sure. I mean, so historically, Bitcoin has traded in these 4-year cycles. So we saw 2014, 2018, 2022, material moves down.
20,000 down to 3,000 at one point, I think.
Absolutely, yeah.
So it can lose 70 or 80% of its value, and then only to see new highs again.
So generally, after those down years, we've seen 2 to 3 years of up 150, 160% returns.
So what would nuts? Is it less volatile now? Are the sell-offs going to be not quite what they were, or is it possible? Let's see, 125. Could it go down to 60,000?
So mathematically, it is becoming less volatile. Just as a strict standard deviation calculation, it is becoming less volatile. You would expect that as you have a wider and deeper market. You have more different types of investors. Obviously, the ETFs have brought in a flood of retail. You have more institutions. Harvard Endowment announced they hold more Bitcoin than gold the other day. So mathematically, that's what you would expect. It doesn't feel that way, to be very honest. Right? The sentiment is brutal right now, and you have to be very, very honest about that. Just like I'm sure, you're holding gold, you feel smart. You didn't feel so smart in 2008 when gold lost a third of its value.
For years and years and years, you just felt
damn feel smart.
Yeah.
So as we've said many times on this show, trying to market time any volatile asset can get you in a lot of trouble.
And that's something you should take with you. Listening here to Coinbase, that it's very, very hard, even for the best people with the best statistics and AI solutions and brains. And yeah, for them, it's hard to, or almost impossible to time the market for these type of assets. It's the long term holding of the asset that can obviously make you money, or can, but most likely are gonna make you money. So keep that in mind, because through this YouTube channel, I want to give you guys solid tips long term that can help you get that return on investment.
Systematically invested in Bitcoin over a 5-year period, you're up an extraordinary amount. Even year to date, while not great, both Bitcoin and Ethereum, while slightly negative, are Ethereum's a little bit up. If you stake your assets, you can earn a higher yield, so you're still net positive. Solana's down materially for the year, 25%, year on year, 41%. However, we had the single best ETF launch of the year for a Solana ETF. So in these situations, I try to step back and ask myself, what has fundamentally changed since, let's say, late September, when everyone was incredibly bullish? And the answer for me is nothing. Structurally, we're where we were, if not better. We have the Czech National Bank announcing a central bank Bitcoin purchase, the first Eurozone country to do that. You've got Citibank and JP Morgan announcing stablecoins that they're using to facilitate customer transactions. You've got Harvard Endowment's announcement. You have successful ETF launches. So it's a challenging environment currently. But in my house, we like apples. I don't like apples less when they're on sale. So if you like this asset, you should like it at a discount.
What if you didn't like it in September and you like it now? Should you like it now at a discount? Because price does matter. I know you're suggesting prices don't matter at all.
If you like it because you thought it was overbought, of course. If you didn't like it because you thought it was overbought, yes. If you didn't like it because you don't agree structurally, probably not.
No, I'm just saying, right? Like sometimes, avocados go up and down in price. You may love avocados, but you may say, this is a little rich for my
Sure.
The price tag's a little high right now. I'm not going to buy the avocados, but
Sure.
The next time I walk in the market and the avocados that are a better price I'll take some.
So you're a technical avocado trader in this example, and that makes perfect sense. I would expect technical traders would be buying into the mean reversion trade at this point. So that's kind of why I'm a little bit confident again, because structurally, I don't see a regulatory environment in the U.S. or globally that is any worse than it was pre-October 2.
What did you make of? And I've been asking the question.
And that was sort of my take here in the beginning. As I said, I haven't seen any structural things changing in terms of why people are buying Bitcoin and the story around Bitcoin. So it's more about the macro perspective now in the world, and some uncertainty and maybe some downward pressure from trading and ETF selling, etc. But I don't feel like, if you are a Bitcoin investor long term, I don't feel like the main story of Bitcoin has changed that much.
Just because I remember being sort of surprised when she first said it. Kathy Wood made a very interesting point. It really did.
Really not.
Well, I know you don't
To
agree.
go from 1 point.
Hold on, just
for one thing to have a price target of 1.5 to have a price target of 1.5 million is ridiculous to start.
Okay.
To go to 1.2 million.
It doesn't even matter. That's not the point. Let me explain.
You know what either. I heard you after.
The point is slightly different. The point is that she made an argument that she was surprised about the success of stablecoins and how she believed that stablecoins, to some degree, could crowd out some of the Bitcoin trade because people are going to use stablecoins more for transactions and the like than she originally thought. She thought Bitcoin might be used more for transactions than they will be, and that was a surprise to her. Forgetting about
so it's only going up 15 times from where it is now instead of 20
about her price
times.
chart. You're focused on the price
20
chart
times from where it is now.
Okay.
I'll just
both
be predictions
quiet.
are ludicrous, right?
So I'm going to say ludicrous. I think Kathy's an incredibly brilliant person, and I trust her judgment. I heard another one of your guests, I think it was Michael Saylor, say that they didn't see the direct correlation between.
Isn't he or something? What's his target?
At some point in the future, right? I'm not sure I see the users of stablecoin substituting that long-term asset for Bitcoin, and I'm not sure I see the people who want to buy Bitcoin as a unit of currency viewing a stablecoin as a surrogate for that. So I'm less confident.
Andrew, for you.
So, yeah, obviously, listening to this interview here, we do see that there are some uncertainty that, where Bitcoin are going long term. Is it staying? Is it 2x, 5x, 10x? Obviously, Katie Wood, if you are an avid investor, you probably know who she is. She likes to invest in new tech, etc. And for me, I don't think Bitcoin is going to be that type of asset that people will use to just have instead of money for transactions, because it's a lot of energy that goes through when you do a Bitcoin transaction. It will cost a lot of actual energy, and it will not be very efficient. Also, it's not as fast as some other cryptocurrencies, so maybe not. It will not be that type of play, but I think as an asset and long term, like the godfather of cryptocurrencies, it's still. If I was to invest in any cryptocurrencies, for me, I think Bitcoin is the most solid long term play, because it's, as I said, I think it's easier for institutions and I guess very rich people to buy Bitcoin than just grab some more random cryptocurrencies long term. And for me, the long term belief is always the most important thing when you invest, and that you believe in the story of what you invest in, and that you don't get paper hands when it turns down. Even though obviously you should sell if you don't believe in the story and the fundamentals of your investment anymore. Sometimes it's actually good to sell. Anyway, thank you for tuning in today. I hope you enjoyed it today, and don't forget to like and subscribe to help with the channel to grow. And obviously, do it if you like what you see, and if you don't, then I'm happy that you listen through everything. So, bye.